to invest in real estate in India. Now, when somebody wants to invest in real estate in India, the funds can flow from the NRO or NRE account, and they can make investments of whatever residential, commercial, plots of land, any number of plots of land which they might desire. But the restriction is that the non-resident Indian cannot carry out business of real estate, by which I would mean that trading in real estate, buying and selling actively real estate is not something which is allowed to a non-resident. Moreover, investment into any agricultural land by a non-resident Indian is also not allowed. A non-resident Indian can hold agricultural land which he or she was holding before he or she became a non-resident Indian, and they can receive agricultural land by way of inheritance, but they cannot buy any new agricultural land. When it comes to taxation on the sale of real estate, the period to qualify for long-term capital gains is 2 years. If the asset was held for a period of 2 years, then it would be taxed at the rate of 20%, and the rate of TDS, which is the withholding tax, is also 20%. Short term, which is below 2 years, short-term capital gain is taxed at the slab rates, and the TDS rates is 30%. Now, the amount on which the TDS is supposed to be made by the buyer of the real estate. So the NRI is a seller and maybe a resident Indian is a buyer. So when the payment is made to the NRI, the TDS is subjected on the entire sale consideration, not just the gains on the transaction. If a non-resident Indian wants to avoid that higher amount of TDS, then they should seek a lower tax deduction certificate expressly from the income tax department. It takes a little time of at least 1.5 months, but the entire process is electronic, and it is possible to get a lower tax deduction certificate in case where the transaction is contemplated. When an agricultural land is sold by an NRI, the sale proceeds of the agricultural land are tax-free if in case the agriculture land is situated beyond a specified limit from the borders of a particular town or city with a certain amount of population. So those rules regarding it have been laid down, but the fact is that the agricultural land situated beyond those specified limits are completely tax-free without any limits. Then, when it comes to repatriation, as we discussed earlier, sale proceeds of real estate, which are residential properties purchased out of NRE account balances or remittances, can be repatriated to the extent of 2 residential properties, and all the credits of real estate which are credited in the NRO account of a NRI would be eligible for repatriation under the $1 million scheme, as explained by me